Let's look at the United States in 1929, Japan in 91, Asia in 97, and let's look at Europe in this same 07 and 08 time frame. Prior to the stock market crash of 1929, you had an almost 20% growth in private debt. And you reached, really for the first time in peacetime, this 150+% absolute level. In Japan, the growth rate was 28% in those 5 years. And debt grew to be more than 200% of GDP. In this chart, the red bars are the private debt and the blue bars are the public debt. In Asia, in the 5 years leading up to the 97 crisis, you had a 29% growth in debt in Korea, for example, a 43% growth in private debt in Indonesia. In Spain, in 2008, in Spain, of the major eurozone countries, was the most egregious in this regard, but Spain grew 49% private debt to GDP in 5 years. It exceeded 200% of GDP and still remains at above that level. In Europe, the issue, the obstacle to recovery is this high level of private debt. What we've done over this past year is we've examined this comprehensively for major economies, the 22 economies in the world that have more than $500 billion in GDP and constitute over 80% of world GDP. This threshold of 20% growth in 5 years and 150% overall level debt holds true. There were 6 such occurrences prior to 2000, and all resulted in banking crisis or GDP contraction, and there were no crises otherwise. There have been 9 occurrences from 2000 forward. 7 of those resulted in crisis or GDP contraction, and there was only 1 crisis otherwise. That was Switzerland in 2008, which of course was because they were intertwined with crisis countries. There is 1 instance that is still in process, and we will examine in a moment, and that's China, where you have 56% growth in private debt in a 5-year period. Now, the next tier down, countries that have 100 to 150% private debt to GDP, it's almost as bad. There have been 13 such instances, and 9 of those resulted in a crisis or GDP contraction. Now, it's not just mortgage debt. There has been this kind of obsessive focus on mortgage debt in the U.S. because that was what precipitated our 07-08 crisis. But there have been as many crises that were precipitated by an increase in business debt. It's also somewhat independent of the instrument involved. There's been a lot of focus on securitizations, credit default swaps and the like, but there have been plenty of crises that did not involve securitizations or things like that.